All right. What's up, traders? What's up, tycoons? Coming at you guys with another viewer request. We're going to look at AREB today, okay? Ticker symbol AREB. This is American Rebel. There is some very important news, especially regarding this timeline here and this date, June 26, 2023. You're going to want to watch to the end of the video because we're going to cover that, and it's very, very important news. We're also going to take a look at the chart here. We have what's known as a diamond bottom forming here. We also have bullish divergence on the MACD and the RSI. And if we get this diamond, bottom forming here, okay, we could end up getting a strong reversal. We'll go over that. We'll also look at things on a smaller time frame, such as the 1 hour, just so you guys can see the levels a little bit clearer and really understand some of the price action, as well as understanding, a little bit more on how to use the RSI and use it to your advantage. Can help you from buying things, from FOMOing in essentially at the wrong time and the wrong place. All right, we're also going to use today's sponsor, Simply Wall Street, to dive into the fundamentals of the stock. Okay, so we're going to go over some technicals and some fundamentals in this video. Simply Wall Street is a really great platform, and as you can see, it breaks down fundamental analysis for you guys, but it also gives you some nice graphs behind it, right? So that way, in case you're not a professional at fundamental analysis, Simply Wall Street makes it really simple for you guys. There will be a link in the description or a pinned comment below, and you guys can get a 14-day free trial and up to 40% off of your purchase if you choose to purchase the membership. All right, that will also help support the channel. Before we move any further, the content provided in this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Trading in stocks, bonds, commodities, and crypto involve a significant risk of loss and is not suitable for all investors. Be sure to read through the full disclaimer. We'll go ahead and start off here now on the daily chart. Okay, so what we have here is very clearly looks like a diamond bottom forming here, indicated by the trend lines, and this is a reversal pattern, right? So you can see we're starting to break out there today, but we're really battling this major resistance level here, and you may wonder why I have these three levels right here and why it says bullish above right there. Well, what these are is this is the 61.8, the 50%, and the 38.2% Fibonacci retracement levels. These are the three most common and well-respected fib levels. And you use these because nothing moves in a straight line down or in a straight line up, right? You're going to get a move down, retracement, continuation of the trend, or a move up, retracement, continuation of that trend, right? And we can see that very clearly, right? We have these strong pushes down, we retrace, and then we continue that trend, right? So ultimately, we need to break through these major retracement levels, okay? So that way we don't continue the downtrend. If we can break through them, then that's when we have a chance of being bullish above and ultimately looking to get some type of reversal to the 30 cents level, maybe even potentially much higher, okay? There's some very important news regarding this stock, and it needs to be at over $1 by a certain timeline to avoid delisting, right? And we'll cover that more later in the video. So we talked about the trend continuation using the fibs, but you can also use it despite trend reversals, right? So if you move down, retrace, and you start to consolidate and break through those retracement levels, that's how you can spot a potential reversal, right? So we see the diamond top or the diamond bottom reversal pattern forming here, right? We're getting a breakout, and we're trying to get past our major retracement levels here. If we can break through these, that's when we have a chance of truly going bullish. So 0.237, 0.216, and 0.1949, these are going to be all of the major levels that we really need to pay attention to. Now, I mentioned bullish divergence before. If you're not familiar with that, take a look at your MACD here and take a look at your RSI. The RSI is your relative strength index, and it's going to measure the relative strength of a stock at its given price levels. So you can see here, we're pretty much flat at these levels, okay? Holding those levels right here, okay, essentially kind of staying flat. And what we see on the RSI is actually different, right? We actually see a low, we see a higher low, and we're making these consistent higher lows on the RSI. So what we're doing is we're actually, increasing in relative strength as the price of the stock is remaining flat here, just above that 12 cents level. And that ultimately is going to be a bullish divergence. It's an indicator that you may see some type of bullish activity. And we see the same thing on the MACD as well, right? Low, higher low, higher low, higher low. And now we're starting to get the breakout, okay? Essentially we have about three things here signaling we could get some bullish activity, right? We have bullish divergence on the MACD, we have bullish divergence on the RSI, and number three is going to be the diamond bottom pattern forming here, okay? Potentially bullish pattern. So we're looking to see if we can get the reversal and possibly take this up to about 30 cents would be the first price target for this reversal to fully play out. Now, if we zoom in a little bit more, we can see how well we're actually respecting these fib levels, right? We actually broke out, came right up to it on the 1 hour chart, and then sellers quickly stepped in and pushed the level down at that 50% retracement level. We weren't able to get above that 50% retracement level there at 0.2160. Now, what we're doing is we're dropping back down to our trend line here. So in a perfect world scenario, you're going to get a breakout retest and then a push higher, right? So it's going to be really important for bulls to come here and take advantage of the retest of this trend line and really step in and push price higher. It's going to be a very bearish signal if we get what's known as a look above and fail, right? And the reason that that is significant and bearish is because at this point right now, this is the chance and the full opportunity for bulls to step in and come in on the retest and really push price higher and show that they're in control. If they don't, then what you have is a false breakout and a look above and fail. And it's significant because it shows that the bears are the ones who are actually truly in control because they gave bulls the chance to really take advantage, and bulls did not take advantage of the opportunity. So that's why it kind of, breaks things down from show you who's in control on a price action standpoint. Now, whenever you're at this level here above 70 on the RSI, that's what's known as overbought. And typically you don't want to be buying in there whenever you're at these overbought conditions, because there's a stronger likelihood that you could get a pullback, right? We see over here, we're at overbought conditions. We end up getting a pullback. Over here as well, we're at overbought conditions and we are getting a pullback. So you want to be mindful of trying to FOMO into something when it's at these overbought conditions, as the likelihood of it pulling back is much higher and, a lot more increased, right? So you definitely want to be mindful of that. If we take a look over here, all right, and using today's sponsor, Simply Wall Street, you can dive into the fundamentals some more and look at the valuation. It gets 2 out of 6 on the valuation score right here. And if we dive a little bit deeper, we can look at the price to sales ratio versus its peers. That's one of the, checkpoints that it gets. And you look at AREB, it's at a 0.2x. The peer average is right here at around 0.2x. So it is a good value based on its, peer average, right around, holding right around that 0.2x. Compared to, some of its peers in the, the sector. If we look at the price to sales ratio versus the industry, it is below the industry average of 1.2x. So from that standpoint, it would technically be, a good value right now. However, when you look at things like the ROE, which is your return on equity right here, you can see that AREB has a negative return on equity as it's currently unprofitable. Right, and you can see it's got a negative 42% ROE. The industry standard is actually positive 11%. You look at the return on capital employed, it's at negative 36%. And if you take a look at the return on its assets, it's at negative 24%. Again, the industry average is at 5%. So there's definitely plenty of risks involved with a company like this. We can dive a little bit deeper and take a look at the financial health, and the financial health doesn't look too bad. It's got 4 out of 6 here on the short-term, long-term liabilities, its debt level, and its ability to reduce debt. But from a stable cash runway and forecasted cash runway spot, it doesn't necessarily look great, which is why they've been doing a lot of share dilution and different things like that. If you take a look at the debt to equity ratio, that's at 21.6% right now. All right, and we look at the earnings growth rate is at negative 16.5%. The commercial services industry growth is at 8.7%. The revenue growth rate is at 73.9. Return on equity, the ROE, we talked about that earlier, negative 42.6. Net margin is at negative 37%. And this is all updated, via the last earnings update, March 31st of 2023. And, when you look at the past performance, all right, their earnings have been declining at an average annual rate of negative 16.5%, while the commercial services industry saw earnings growing at 8.7% annually. Revenues have been growing at an average of 73.9% per year. So, there are some good points, there are a lot of risks involved with companies like this. If you take a look at the financials, I know a lot of people are targeting this for a potential squeeze. But really the big news here that you really want to pay attention to is going to be right over here. Okay, so if you take a look at this date, June 26, 2023, what happened was American Rebels received a written notification from the NASDAQ stock market indicating that they were not in compliance with the NASDAQ listing rule. All right, and basically saying that their share was below $1 per share for 33 consecutive business days. The company received notice from the Nasdaq indicating that while they have not regained compliance with the bid price requirement, Nasdaq has determined that the registrant is eligible for an additional 180-day period or until June 26th of 2023 to regain compliance. Now, according to the notification from Nasdaq, the staff's determination was based on them meeting the continued listing requirement for market value of its publicly held shares and all other applicable Nasdaq initial listing standards, with the exception of the minimum bid price requirement, and the registrant's written notice to the Nasdaq of its intention to cure the deficiency during the second compliance period by effecting a reverse stock split if necessary. So if at any time during this second 180-day compliance period, the closing bid price of the common stock is at least $1 per share, for a minimum of 10 consecutive business days, Nasdaq will provide the registrant with written confirmation of compliance. And so essentially what's going to happen here is they have to hold above $1, okay, $1 per share for 10 consecutive business days. That's about 2 weeks by June 26th of 2023. If they don't, okay, then what they're going to do is actually issue a reverse stock split. All right, that's what they're going to do. They've given written notice to the Nasdaq of its intention to cure being below $1 by doing in the secondary compliance period, aka by June 26th, a reverse stock split if necessary to bring the price up to $1, right? So that could be a 5-to-1 reverse stock split, that could be a 10-to-1 reverse stock split. So you definitely need to keep that in mind. Now, is it possible that it can go from, 20, 30 cents all the way up to $1? Yeah, it is very possible, but there's a quick timeline on this. June is fast approaching. We're already towards the end of May right now, and this stock has got a little over a month. So it does have a lot of people's attention right now, thinking that, they can get the share price up to $1, but you have to realize that they may end up doing this via a reverse split, right? So be very mindful of that over the next month until June 26, 2023. If the share price isn't at $1, for the next 2 weeks, and that's something you always also have to consider. So essentially, June 26th, they have to do it by June 12th, right? Because that'll give it 2 weeks for it to be at $1. So the share price really has less than a month to really get back above that $1 price. If that doesn't happen, then they're most likely going to be doing a reverse stock split. So that's it for today's video. Hopefully you enjoyed it. Use the link in the description or the pinned comment below to try out Simply Wall Street, today's sponsor. You can get a 14-day free trial or up to 40% off of your purchase if you do decide to go ahead with a membership. What I want you guys to do is not just look up this stock, but look up some of your favorite stocks or something that you want to invest in. It's going to break things down for you guys in a really easy to read manner and also give you some nice graphs and visuals just in case you're not an expert at fundamental analysis. Simply Wall Street, have their experts there to really help you guys out and make it as simple as possible. They have a nice version on, the web, right? So you can go to the website, and they also have a really nice and simple, easy to use app.